Hi, Nanafik here. In this section I want to tell you about supply and demand. Why do we use supply and demand? For many people new to trading and investing, they will be entering when the market has already made the move that we would like to catch. I will try to illustrate. So, for example here, then the market is going up. And then many people new to trading and investing, they would like to buy here. What will happen? The market goes down. Okay, now the market is going down. So now we will be selling the market. The market turns around right away and starts going up. And now it's quite frustrating because now we have had a couple of losing trades. So the market goes up. Okay, so we should be buying. We can see the market is going up and right away the market turns around and goes down. And then we have to breathe for a while and the market is chopping a little bit and okay, the market is going down and it turns around and goes up. This is very, very normal. And one reason is that it can be a little bit difficult to capture all of this information when you're new. When you're new, you would be looking at a very limited area at the chart, and actually you would be very often looking at a small move. So this move will make everything, would be everything. And when the market starts going down, it is only this move you will be looking at. So that is why we talk about fishing the stops sometimes, because the professionals, they know that all of the amateurs, they are doing this. So what they do, they sit and they slowly eat all of the amateurs. I'm sorry, it's not to laugh. I have been a beginner myself. Trust me, I have been eaten a lot. A lot. But at some point I decided that I wanted to learn how to get into the market the same place as the professionals, and doing that, and throughout my journey I have become a professional myself, and sometimes it is me who is now eating the amateurs, but I also want to give something back, because being a trader is the most fantastic thing I have ever done for myself. So I hope that you will stick to it and keep on doing what you're doing and keep on learning, because at some point it will be you who becomes a professional and start eating all of the amateurs. But if we want to know where the professionals are entering the market, we can use supply and demand. And supply and demand are areas where we have a change in the balance between sellers and buyers. And we can see here that up here where we wanted to buy, we can see up here that we have an area where the balance between sellers and buyers is shifting. And we can see down here where we sold before, we have a change in the balance between buyers and sellers. And like pattern recognition, like price action, like any other discipline in the market, using supply and demand is a question about training your eyes to see what is in the market. So a simple way for me is to look at, okay, where does this market change? Down here, and we start having momentum to the upside. And as we have talked about, I do it like this. Oh, the momentum is when we get these strong pushes up, strong push down, strong push up. You can see here at the bars, they are solid bodies. And the bar is closing close to the top every time. Okay. So this is where I put my box, because down here is the area where we start getting strong momentum. And you can see how much the market does respect this area. And then we get into this area up here where we have our supply and demand, where the sellers are. So what the professionals are doing, they're looking for these areas. They don't care about how the market is looking in here. They don't care what the market is doing in here. They are only looking at the price levels where there will be a change, a shift, where there will be a lot of buying order. Professionals, they are in this game for the pips or the points, depending on what you're trading. Right now we're looking at a dollar-yen 1 hour graph. The professionals, they are in it for the points, and what is going on in between here, it doesn't really matter. They don't care how the paths are looking. They're only looking at this price level up here. And as you can see here, we have a move up and a shift to the downside and a shift to the upside. And then we get into an area here where there is a balance. And when we have this narrow area where the market is doing like this, it is because there is a high degree of balance between the sellers and the buyers. And what we can see from this is it's not yet decided whether the market is about to go up or the market is about to go down. And if we cannot see what the market is doing, then don't do anything. It can be very profitable not to do anything, because if you try to catch something in a market that looks like this, you will most likely lose more money than you will make. And what happened? The market actually started going up here. So now we have this area. It is where the market kicks off to the upside. And then we have this area here where we had the previous supply and demand zone. And what is happening? The market is being pushed up. It turns down, and all of the people who did not get on board on this move in the upside direction, they have their buying orders down here, and they get on board, and the market is pushed off. And we can see here, this is a little bit different, because it's actually not different from this area over here, but the difference is that the market starts going up. If we look a bit on the structure, then we have in the market, and this is quite important to understand. Markets are very rarely in a trend. Most of the time, the markets, they are trading in ranges, and a range is a market moving up, down, up, down, up, down. An index, a product like Dow, is a product, financial product. Dow Jones is a product that is having more trend days than many other products. And on average, there are trend days in Dow Jones about 13% of the time. If we look at a product like the German DAX index, there is less days with trends. And if we look at products like oil and gold and Forex, then we have much more ranging environment. So if you want to become good at trading and become good at making money in the markets, you should be very good at trading ranges. This is what is going on absolutely most of the time. 90% of the time we are trading in ranges. So learn how to trade a range. But the structure in the market is like, and I have to say this is not something I came up with at all. There are previous traders that have been talking about this. One I have been listening to is Inner Circle Trader. I think he is really, really good at explaining, and he's old in this game, so many people are inspired by him. But this is the structure in the market. It's not a rocket science at all. This is just something you need to understand. We have these consolidation areas. And then we have in between them a move, a move, a move, move down, move up, a movement, a movement, and a movement, and so on. So this is how the market is moving. It is this consolidation, move to the upside, consolidation, move to the upside. And what we are using supply and demand for is to determine whether the market, when we have entered a consolidation area, whether the market will continue in an upwards direction or downwards, or we will be in a range for a while. And when you can see all of these things, then you can plan how you will be trading. Because down here, if you get to this area down here, you can either wait for the market to push lower and then buy, or you can say, I guess when we hit this, the market will go up. But if you want some more certainty, then you should use the price action way, where we're waiting for some confirmation. So we hit this area, we get confirmation the market is going up, then we will be buying. We get to this area up here, and then we wait for confirmation that the market will go down. We do not get it here. We do not get a point where the market is pushing lower than the range we are trading in right here. So what we see is a confirmation to the upside that the market is moving up. So we will be buying. From here, when we have this supply and demand, so we wait for confirmation that the market will move up, and we buy. So this is about catching the moves between all of the consolidation areas. And supply and demand tells us where we have the balance between sellers and buyers. And price action tells us whether we should be buying or selling. So this is supply and demand. And this is where the professionals, they put their orders and they are trading. Because if we're going to the upside, this market is moving up, so this is actually a trend. Maybe not the best example, but this is a trend. And the professionals, they do not want to buy up here. No, they want to buy down here, where they earn more on their trade. Their risk is lowered, and their profit potential is higher. And that is what you want to do when you're a professional. You want much more, and you don't want to lose too many money. So this is very, very standard market in Forex actually. So here we have a top where we have supply and demand. You can see the market is moving down, up, touches this area, and then starts moving to the downside. Oh. Then you have over here where the market took off last time, and you go down to this area, and now you have a really good target area. So if you have sold up here, you have a supply and demand zone, you get confirmation, you sell up here, then you have a really good target area with a high probability, because the market will seek this area. And then down here, you have to wait for confirmation for the market to go up. If it doesn't, then you sit and wait. You just sit and wait until the market is showing you what it will be doing. Then you have an area over here. This is the first area we drew in actually. You have it over here, and what happens? The market goes down, you get confirmation. Maybe you're stopped out, maybe you have your stop loss up here, and it goes right down to this area. Then you sit and wait and watch. What is the market doing? You get confirmation to the upside that the market will be moving up. Now all of the orders has probably been eaten in here. So what you have is the new level where the market is turning around. You get confirmation. You have a target area up here. So this is supply and demand. This is a matter about getting the most out of your trades with the lowest risk possible. So, and as everything else, you need to train your eyes to see this. It is when you can see it, then it's just everywhere, and it gets easier, like pattern recognition, like price action. This gives you a set of rules for how to enter the market, how to get out of the market again. And what everything is about when it comes to trading, it is about having to make as few decisions as possible, because the more decisions you have to make, the more tired you get. And we use a lot of energy taking these decisions and figuring out what to do. So the more thing we can automate and put over to the side and say, I don't have to decide anything here because I know what to do when I reach this area, the easier it will be on us, and the more we will be able to trade actually, because we won't be as tired. So I hope this has inspired you and is useful for you. And then I wish you all the best, and I wish you good trading, and I hope that you will be as happy for becoming a trader as I have been. Good luck out there.